Hey guys, if we're meeting for the first time, my name is Vlad. I'm a real estate agent with the Purple Tree Real Estate Group in Toronto, Ontario. Today I'm going to give you an overview of what's happening in the real estate market for week 42, which is the second part of October of 2023. As I'm sure you know, the market has been quite volatile this year, and there's a lot of unpredictability in the marketplace between now and the end of the year and for 2024 for that matter. So as always, if you're thinking about selling but not sure how to position your property correctly in this tough marketplace, or you're thinking about buying, but the whole process is a complete mystery to you and you don't want to miss out or misfire, reach out to either myself or my partner Mitra. We're going to link up our calendar in the description below, and it's a simple process of clicking a link, finding the availability that suits you on our calendars, and then schedule a 15-minute no-obligation consultation. So let's dive directly into the topics. So let's first talk about the volume of sales in the marketplace. We've not seen such low volumes as we're experiencing this year for over 23 years. In other words, in order for us to experience anything resembling the current marketplace, we have to go all the way back to the year 2000. The prices between the month of August and September in the current year have edged slightly higher. And by the way, the reason why we're comparing August and September and not September and October is twofold. First of all, we simply don't have the data for October yet. And the reason for that is that the TREB market reports, Toronto Regional Real Estate Board market reports, are coming out every month in the first week of each month. And in order for us to see the October data, we need to wait until the end of the first week of November. So the last point of comparison that we have is naturally September. But the second reason for this is that the August and September months provide us with a demarcation point between the summer market and the fall market. And normally, whatever that normal is, or that's what we've been seeing over the past couple of decades, the market in the fall, starting right after the Labor Day in September, is a lot more active than the market in the summer. And certainly August is the slowest month as far as the market is concerned in the summer. And yet, comparing the volumes between the month of August and September, we're seeing that they've dropped by a further 12%. There's a 12% decline between what was selling in August and what was selling in September, which is quite dramatic. Prices are climbing up and the inventory is climbing up at the same time. So, you know what? That's one of the unexplained mysteries of the current marketplace. At this point, we have 19,000 active listings, and the last time we had that number of listings was back in 2010. Let's touch on the months of inventory in the GTA. Right now, we are at 4 months of inventory, whereas normally, for the fall market, the months of inventory fluctuate between 2 and 2.3, maybe on occasion 2.5, but we've not seen 4 months of inventory in a long, long time. Also, to put this in perspective, what does that mean? It means out of 4 properties that are listed in the marketplace, only 1 will sell over a given month. The situation, and this number is actually across all property types, the situation with condos is even more dramatic. So here we have about 6 months of inventory. And what that means, very similarly, again, out of every 6 condos that are listed over a given month, only 1 will sell. And our months of inventory are higher than they were in the thick of the pandemic, when we were restricted to staying in our homes. We weren't able to conduct our business as normal. We couldn't go out. And believe it or not, right now, we're experiencing a market that is actually worse than that. And if you're thinking about hiring a realtor in this tough marketplace, you better find somebody who has the experience of knowing what to do in this type of a marketplace, somebody who had lived through recessions or substantial market drops in the past. We have several over the past 15 years. Probably the biggest one was back in 2008 or between 2008 and 2009. The US suffered dramatically. Canadian prices have gone down by about 6 months and then quickly rebounded after that. So we were back in business, so to speak, in 2009. We had a second correction in 2017, then the third one during the pandemic. Then things have changed around again. And we're going to talk about this a little more, but every time there was a spike in prices, it coincided with the Bank of Canada lowering interest rates. Let's talk about interest rates. It seems to be one of the hottest topics of a conversation in 2023. Everyone is knowledgeable about what's going on, and people even started following the interest rate announcement schedules. And if you are following that, you would know that we have one more coming at the end of October, and then there's going to be one more opportunity for the BOC to do something. BOC stands for the Bank of Canada in early December as well. Up until late last week, it was quite plausible that there's going to be another interest rate hike at the end of October during the announcement. But now with the release of the inflation data from a couple of days ago, it was released earlier this week, we see that the CPI inflation numbers have gone down from 4.1% to 3.8%, and we see signs that the overall economy is slowing down. So it's quite possible that the Bank of Canada will actually hold the rates in October, which is welcome news. At the same time, I do not believe that this will change the dynamic in the marketplace dramatically, and that buyers or the buyer sentiment is still not there. They're still afraid. They're still thinking that interest rates might go up and the economy is so unstable, so they better sit on the sidelines. And with the elevated levels of inventory that we have at this point, and we will continue maintaining them and living with them for a few more quarters to come. In 2020, for instance, we also had elevated levels of inventory, but the trump card that we had in our back pocket then was interest rates that were close to zero. So buyers could go out in the marketplace and actually absorb all the excess inventory and bring it down to only 2 months instead of, say, 4 months for all property types or 6 months for condos. Then it was only 2 months. Right now, we don't have that luxury and the advantage of having low interest rates. So most likely 2024 is going to be roughly the same. Prices are going to be teetering at the same level, stagnating as what we have right now, or maybe going down. And we're going to talk about what some of the predictions with regards to prices are, but the inventory levels are going to continue staying elevated. Let's look at the report from TD Bank, where they're saying that the Canadian real estate prices are expected to fall further than expected due to yields. Of course, they mean bond yields, and they go on to explain to us that the Government of Canada 5-year bond yields, which is a product that's influencing quite substantially the 5-year fixed mortgage rates, have gone up from 3.75% back in June to 4%. And of course, almost simultaneously with that, the 5 major banks upgraded their product offerings and started offering 5-year fixed mortgage terms at rates close to 8%. So this, of course, puts a lot of pressure on prices, and we will likely see, as I said earlier, prices to teeter at the same level that we are at right now, or start trickling down a little bit as we getting into the slower time of the year, which is around Christmas, and then God only knows what's going to happen when the market is supposed to pick up again, which is generally February of 2024. And at this point, I wanted to give you a quick tip. If you're a seller, and it doesn't matter if you are a homeowner owning your primary residence and that's it, or you're an investor that owns a variety of homes, what matters is that if you're feeling the pinch of today's economy, or every time the date comes due for you to pay your mortgage and you feel that the cash flow is simply not there and therefore you're considering a sale of the property, get in touch with us. We'll include the link to our calendar in the description below. The process is very simple. You get into a calendar, you find a 15-minute time slot that works for you and works for us. You schedule an appointment, we have a conversation, we'll give you all the facts that matter in today's marketplace depending on your location and the price point, and then you'll decide how you want to proceed. And by the way, the fall market is short to begin with. The market usually picks up from the second week of September, right after the Labor Day. And I'm not necessarily saying that the market had picked up this year in 2023, but we have what we have. And it lasts until roughly the middle of December, when people start thinking about other things than selling their home. They think about the Christmas and the New Year and their resolutions and the presents and whatnot. So now we are at the end of October. We have less than 8 weeks remaining between now and the middle of December. So the time slot for you to actually sell the house is quite short. And if you're thinking about selling, you better be on the market within the next couple of weeks at the most, so you have the time to prep all the materials for the property, get it on the market, get it sold, and you can close at any time later. If you are in a situation where you are still in the same home, or still owning the same properties as an investor in 2024, your first opportunity to sell that house or that condo is going to come in early February, because between the 1st of January and the first week of February, the market is usually very slow and we don't want you to lose your shirt on the sale. If you're a buyer and you're thinking about purchasing a home, be it a first time purchase or you grow in a family and you're thinking about upgrading, it really doesn't matter. The opportunities out there are plentiful. We've talked about the levels of inventory and there are deals out there. It's only a matter of finding them. Furthermore, I'll tell you one more thing, rather schedule an appointment with us so that we can share with you the off-market properties that we always have in our inventory, in our team's inventory, things that come across our desk, because normally those will constitute fantastic deals and you don't have to wait or search for them for too long. So either way, schedule a quick appointment with us. We'll have a conversation and you'll be on your merry way to either sell or to buy. And now let's talk about the affordability. There are basically two camps. There are people that are just thinking about getting into the market for the first time, and affordability is crucially important to them. Many of them cannot afford anything in this market. Some can, but they would like for the prices to be better. Just to give you a perspective for where things are at, over the past 15 years, salaries had increased by approximately 17%, whereas home prices have more than doubled. A median home price 15 years ago was just above $300,000, and now in 2023, it's at $750,000, and that's across Canada. So things are not that great from the affordability standpoint. And if you're making the same salary as you were 20 years ago, but somehow you didn't manage to get into the housing market, it's a very tough situation for you at this point. At the same time, we have the other camp. People that have inherited properties or have purchased their properties themselves 20, 30 years ago, they've accumulated substantial equity or their homes are completely paid out. Of course, they don't want any changes to the housing affordability. We're in a fantastic spot at this point. Prices have more than doubled in the past 15 years, so people are enjoying the newfound wealth. The Royal Bank of Canada is telling us in a report that they published just about a week ago that there are only two things that can improve affordability and save the first-time home buyers. One is a total market crash, and two is a face-about in the monetary policy from the Bank of Canada. I don't really believe that the latter part of this argument holds any water, because if you look at the period of time between the global crash of 2008 and 2023, every time the market in Toronto had experienced a spike in prices, perfectly coincided with the Bank of Canada decreasing interest rate. And I want to bring in one more report from Desjardins where they're saying that even if the market were to crash by 30%, and by the way, they're not predicting that this will happen, they're just saying that if the market were to crash by 30%, which by the way, they deem to be quite unlikely, it will only bring us back to the elevated prices that we had in 2015. So it seems that there is no fix in this market. Let's just live with what we have. Let's make do with the conditions that we're experiencing right now. And as I mentioned earlier, if you're not sure about how to position your property in this marketplace, or you're thinking about buying, but this whole thing and the market situation is a complete black box for you, click on the link below, connect with us through a calendar connection, find out a 15-minute time slot that works for you and for us, and let's have a phone conversation. Guys, as always, if you like the content, hit the like button. Consider subscribing so you don't miss any new releases of these market reports. And I'm looking forward to seeing you again in a couple of weeks.